Well, let's bring in ZipRecruiter Chief Economist Julia Pollak. And, Julia, just how, Jerry went over all of these things, right, that we've got coming into this number tomorrow. And it is perplexing. It's confusing. How are you navigating all these conflicting signals?
Well, you'll have the effect of strikes in there as well. Boeing machinists strike. Right. You'll have the effect of storms, and then also seasonal adjustments. Remember, October is a month in which employment usually grows by about 1 million. But the early signs from the JOLTS report are that holiday hiring this year is pretty slow, maybe because seasonal patterns have changed since the pandemic, or because, well, restrictive monetary policy does slow things down.
Now, I know that you have been concerned, all along with the growth, the concentration of gains that we've seen so far. Explain that to the audience.
Absolutely. So not only over the past 2 quarters have we seen job growth slow below the pre-pandemic average, but we've also seen those gains become very narrowly concentrated in just a couple of super sectors that together account for only half of employment. So you've got half of the labor force creating all of the net job gains, and the rest of the labor force treading water, holding flat, doing nothing much at all. People, workers, are not interchangeable cogs in a wheel. And so it really matters how that growth is distributed. If you're in professional services, if you're a new graduate, if you studied communications and there are only jobs in healthcare, that doesn't help you much.
And of course, government's been a big part of that. We also saw it with GDP yesterday, government spending. We know it's always bigger, larger during election years, and I think a lot of that COVID money was sent to states to help bolster the economy, particularly at this time period. But could there be a fall off from that? Shouldn't we be bracing for a fall off at some point?
So I think the main reason that government hiring has been so strong is that the recovery in government hiring was delayed. It was way behind the recovery in the private sector simply because the government is sluggish and unwieldy and slow, and it takes a lot longer to negotiate to raise wages, whereas private sector companies can negotiate with workers one-on-one and do whatever they like when they are in a pinch and need to fill a vacancy.
I want to talk about your survey because there's a bunch of good stuff in here. Your new hiring survey. A quarter of the U.S. residents, started their current jobs within the past 6 months. That seems like a remarkable number. What's the overall sentiment amongst these new hires?
Sure. So we have surveys of newly hired workers and surveys of job seekers, and those both show that sentiment among job seekers and new hires is not so great right now. Workers are finding it harder to get jobs. They're feeling less upbeat about the availability of jobs. And for the most part, when they are getting hired, they're getting less of an improvement than they did in the past. Fewer are seeing their wages grow and their working conditions improve. And so many are sticking around on the market and continuing to look because they don't feel like they've landed their forever job.
Yeah, but the pendulum has swung, right? It was about 1.5 years ago, 2 years ago when the worker was in control. You can ghost the job and get a new one a week later. I think those days are certainly over. Who knows? At some point, we've been able to skirt around a recession for a long time. I do have to, though, ask you for a number, even though it feels like a coin flip. Do you have a number? What do you anticipate we'll hear tomorrow morning?
So I would never encourage anyone to bet and put real money on the line on the jobs number, but I think the risks are to the downside on this one. I think we could have a weak number, both due to weak seasonal hiring and to the storms and strikes, but also just the overall big picture in this labor market, which is that, yes, it's growing, but it's slowing and that growth is narrowing. And until interest rates are no longer restrictive, well, that will continue to be the case.
What about the revision? Because, that last number was huge. A lot of noise in there. Could we see a big revision as well?
We definitely could. There have been much larger revisions than usual in recent years. Mostly that's because survey response rates have fallen. So it's becoming more and more difficult for government statisticians to do their jobs and call these things correctly.
All right. Tomorrow at 8:30, I'll be thinking about you. Julia, thank you very much. You didn't give me an exact number, but you gave me the under. That's cool. All right.